Hello and welcome to GSM Chart's intuitive guide on copy trading. We're starting off by going over the foundational education of what you need to know in the foreign exchange market before actually going into the MT4 app and copying our trades. Our mission today is simple. We're going to be unraveling the mysteries around the foreign exchange market by arming you with knowledge that you need to confidently copy our trades and profit on your own terms. So without further ado, let's get into it. The first thing I want to discuss is currency pair dynamics. On the MT4 platform, a currency pair is represented by two economies. You can see on the left-hand side of the platform, we have Euro USD and GBP JPY. Euro USD is just broken down into two different economies, and this represents both economies compared to one another. These pairs shift and change like ocean tides, representing economic news, global events, and the overall mood of that market. You'll see these prices fluctuating every second, and this truly captures the essence of Forex trading. So on the left-hand side of the MT4 platform, we have our currency pairs, and remember, those are just two economies compared to one another. And then on the right-hand side, we have these varying prices in constant flux. Now that we have an idea of what a currency pair is, let's take a look at how economic events shape the foreign exchange market. Going back to the ocean example previously, just like the weather could influence the ocean, the economic events that happen on a day-to-day basis could greatly influence what happens in the foreign exchange market. Imagine a central bank raising its interest rates to boost the currency like a helpful wind would help push a ship along the ocean. Conversely, bad economic news could act as a challenging headwind. So we can see from this illustration that the higher the currency value is, the better the economy is. But the lower currency value, the worse the economy is. Now, really quickly, let's take a look at historical events and their impact on the foreign exchange market. Let's take the recent conflict in Ukraine, for example. This really affected the commodities market by disrupting the grain supplies, which triggered a very huge supply shock. This ultimately caused increased demand for the US dollar and great strength for the US dollar. This historical war is one of many different economic events that hugely impact economies in the foreign exchange market. From our desk at GSM Charts, my team and I keep a close eye on all of these global economic events so that you make sharp and informed trading decisions. And although this isn't a step-by-step guide for you to trade independently, this does give you a scope and an idea of what happens in the foreign exchange market to drive profits. Grasping these concepts is crucial to understanding the value and the strategy of the trade ideas that we provide here at GSM Charts. Now that we discussed the impact of economic events on the foreign exchange market, let's take a look at the intricacies of MT4 currency pairs. Picture this: every time that you look at a currency pair on MT4, like Euro USD, for example, you're actually looking at a live model of what that global economy looks like in that exact moment. These currency pairs aren't just digits on a screen. It's a vivid depiction of two distinct economies compared to one another. So the question has to be asked: what are you really seeing on this screen? There are two key figures that pop out. We have the sell and buy prices. And these aren't just random numbers. These are finely tuned and very specific for that moment, and they are very meaningful. So we can see on the right-hand side, we have the buy or ask price, and this is the rate at which you buy the base currency. And the base currency is the first portion of that currency pair, and we'll get into that a little bit later into the presentation. And then we have the sell or bid price on the left-hand side, and this is the rate at which you sell the base currency. And then you may ask yourself the next question: how are these prices set? So let's get into it. These prices are set by supply and demand. These cause exchange rates to constantly fluctuate. Now, supply and demand is influenced by a bunch of different economic events, but I've outlined the 5 top events that influence supply and demand. Number 1, starting at central bank interest rate decisions, all the way down to an FOMC meeting. The Forex market is like an international marketplace where countries' currencies are traded, very similar to goods. For instance, if the US economy is doing well, the dollar may gain against the euro. So you could observe this on Euro USD. Or if the European economy is looking promising, then you'll be able to see this on Euro USD just in the opposite direction. Another main component that significantly determines the exchange rate are brokers. Your broker plays a very significant role on how these exchange prices are set on your MT4 platform. Now, you can see that these prices are set based on the market rates, but they also add a spread for facilitating that trade for you. And I feel that's the best way to understand what spread is. It's just the broker's fee for facilitating that trade that they tack on top of that market rate. Now, we could determine the spread by just subtracting the bid price by the ask price. And this gives us our overall spread in pips. Now, you may not know what pips mean, but don't worry. In this presentation, we're going to go over all of that. What's very unique is that the spread varies from broker to broker. So there may be a broker that has very tight spreads, but they have other transactional costs. And then there's another broker that has very wide spreads, but they provide better trading terms and better perks. And remember, these prices are constantly fluctuating and responding to economic events like a needle on a sensitive gauge. A sudden interest rate decision or economic event could cause prices to skyrocket or plummet. And that's why we recommend that you copy trade with us first before going out and trading on your own terms. Understanding the essence of currency pairs is the backbone of Forex trading. It's not just about crunching numbers. It's about understanding the story behind the currency pairs so that you can make well-informed trading decisions when you're on the MT4 platform. Now, let's jump into a very crucial concept when it comes to trading the foreign exchange market, and that's understanding the role of pips. A pip stands for percentage in point, and this is the smallest unit that price could move in a currency pair. Usually, this refers to a one-digit move in the fourth decimal place of a currency pair. For Japanese yen currency pairs, it's only the second decimal place. So we could see with the illustration on the right-hand side, if we move that decimal 4 places, that will be our pip, which is the 3 in this exchange rate. And really quickly, let's just take a look at a live example. Let's say we're here on Euro USD, and the exchange rate went from 1.05834 to 1.05844. This would be a 1 pip change. And you may be asking yourself, why should I even care about pips? This concept is going to be the bread and butter for your trading outcomes. It's very important to note that the value of a pip depends on your lot size. So let's take a look at lot sizes in Forex. On the right-hand side, you could see all the different types of lot sizes that we trade in the foreign exchange market, starting from nano and working our way up to standard. Now, a standard lot size is represented as 1.00 on the MetaTrader 4 app, and we'll get into that later in this presentation. And this also represents $10 per pip movement. But if you're trading smaller lot sizes like mini, micro, or even nano, the pip value steadily decreases accordingly. So let's paint a picture real quick. Let's say that you buy on Euro USD, which basically means that you're anticipating price is going to rise. Let's say you bought at 1.05834, and then you ended up exiting that trade at 1.05934. That means that the market has moved 10 pips in your direction. Now, let's say that you were using a standard lot, which is $10 per pip. You would multiply that by how many pips you caught in the market, which was 10 pips, and that would equal $100 profit in your trading account. But conversely, let's say you bought Euro USD and it ended up falling another 10 pips. This means that you would lose $100 in the market. Pips also come in handy when setting your stop loss and take profit in the markets. We could see that a stop loss is a defensive mechanism that automatically closes your trade at a preset loss level so that you don't incur any more losses in the market. And the opposite is true for take profit, which is just an offensive mechanism that automatically closes your trade once it reaches your desired profit target so you could close out in profit. You'll want to measure these stop loss and take profit levels based on pips. So you want to make sure that you understand this concept completely before moving on to the next level. Now, you also want to keep in mind something called risk to reward ratio. And this is basically comparing your take profit to your stop loss. So taking a look at this example, we could see our stop loss is set at 10 pips, but our take profit is set at 30 pips, which is 3 times the amount of our stop loss. So our risk to reward ratio would be 1 to 3. So basically, if we risked 1% on this trade and we hit stop loss, we would only lose 1%. But if we risked 1% and we hit take profit, we would gain 3% on the trade. Now, it's very important to note that the higher your risk to reward ratio is, the lower your winning percentage is going to be. So you want to set a proper risk to reward ratio that works for you. I highly recommend not using under a 1-to-1 risk to reward ratio, but it's best to test and figure out what works best. In the trading game, every pip matters. It's a snapshot of the foreign exchange market's ups and downs. And knowing its impact is key for smart risk management. Right here, we're going to take a look at navigating through different Forex timeframes. Forex charts are a sneak peek of the market's heartbeat, giving you a view of its ups and downs on various different timeframes. It's super important to note that each timeframe serves a distinct purpose and caters to various trading styles. And aligning your trades with the right timeframe can be the difference between a successful strategy and a missed opportunity. So on the right-hand side, we could see that we have a bunch of different time frames, starting from the weekly and working our way down to the 1 minute. And remember, each time frame serves a distinct purpose for that type of trader. For my personal preference, I love starting off on the daily time frame just to get a broader look at what the market has done over the past couple months. And then you can work your way down to the smaller time frames to pinpoint an entry. But there's more to it than just time frames. It's very important to know the different types of Forex trading sessions. We could see it's crucial to consider the market's open and close times. Although it's a 24-hour arena, not all of these hours are created equal. They're split into 4 different trading sessions, and you must understand when these trading sessions are active and when they're not active. The reason you want to try to hone in on one of these trading sessions is because the activity in the market significantly increases, and you want to be trading the market when there's a lot of activity there. On the right-hand side, you could see that we have the Tokyo session. We have the London session, which is the most active session. The second most active session is the New York session. And then we have that Sydney session. In Forex, picking the correct time frame and trading session could make or break a successful trading strategy. In the ever-changing realm of Forex trading, there are 2 concepts that every single trader must wrap their head around, and that is leverage and margin. These may sound a bit technical, but really they just pump up your trading game for the better or for the worse. Let's untangle leverage first. This is basically just a financial booster that allows you to control a much larger position in the market than what your actual initial investment would permit. So if we see the illustration on the right-hand side, we could see that if we invest $100, we could trade up to $5,000 of trading capital with 50 to 1 leverage. So basically, we're just multiplying our initial investment or our margin by 50, and now we have $5,000 of trading capital. This is what makes the foreign exchange market so much more of a low barrier to entry compared to the stock market. This also enables traders with limited capital to aim for very high profits in these markets. But it's also a double-edged sword because although it could ramp up your profits, it could also double down on your losses. Let's take a look at what margin is. This is just the amount of capital required to open and maintain a leveraged position in the markets. An easy and simple way to think about it is just a security deposit that your broker holds to cover your potential losses. It's almost acting as collateral. So we can see on the right-hand side with this illustration, if we want a leveraged position worth $5,000, we must have $100 in our trading account to open that position. Getting these concepts down is crucial for trading on MT4. They're basically the foundation of your strategy, and they give people with not much money to invest a very big shot at the foreign exchange market. This leads us to the brokers we recommend here at GSM Charts, which are only top-notch brokers like PU Prime. They offer a variety of leverage options, offering all the way up to 500 to 1. This level of leverage could open up so many opportunities to rake in a bunch of profits in the foreign exchange market. Since we've gone through the theory behind Forex trading on MT4, now it's time to roll up our sleeves for the real deal, welcoming you to the practical world of copy trading with GSM Charts. This is an excellent way for beginners to dive into Forex trading without the steep learning curve or the risks associated with novice trading decisions. Imagine having a seasoned Forex trader guiding you every step of the way, allowing you to benefit from his expertise, analysis, and different trading strategies. Well, there's no need to imagine because this is exactly what we provide here at GSM Charts. In our community group chats, we provide trade ideas and setups. And these aren't just shots in the dark. These are time-tested and vetted trading setups that are provided by our professional traders. To really benefit from these setups, it's very important to understand all the concepts that we've just went over, like pips, exchange rate, and currency pairs, and make sure to apply it in the actual markets. Next up in this video, we'll walk you through how to log into MT4, how to copy the trade setups, and how to actually make use of them to profit on your own terms. This hands-on approach ensures that you're not copying our trades blindly, but doing so with a well-informed approach. It's all about mixing the convenience of copy trading with the power of understanding. Here at GSM Charts, we are all in for your trading success. Every trade you copy, every piece of wisdom that we pass on, it's part of a bigger picture. It's building a community of successful traders. So when you win, we win. And that's why we're thrilled to announce our upcoming iInvest app. This app is going to ramp up your trading game with more resources, tools, and more community support. We're building a whole ecosystem to back up traders everywhere. Let's kick off with getting into MT4. Once your broker account is set up, you'll receive login credentials through your email. And you're going to want to go through your email very thoroughly. Make sure to check your spam and draft folders because sometimes the login credentials could end up here. And sometimes you may even find that your login credentials are directly on the broker's dashboard. Here's a quick tutorial of how to use your login credentials to log into MT4. So first thing you're going to want to do is head to your email, and remember, check your spam and draft folder because sometimes the credentials could end up here. And make sure you get your login credentials, whether it's through the email or the broker's dashboard. And then you'll want to go and head over to the MT4 platform. And if you don't have this app, just go to the App Store or the Play Store and download it very quickly. It's completely free. Once you have it downloaded, you'll want to go to the bottom right-hand side and click on Settings. This will prompt you with a bunch of different buttons. Just click on the New Account button. Then, of course, you're going to be prompted with opening a demo account or logging into an existing account. If you have already created an account with a broker, then you're going to want to click on Log into an existing account. Now, this is where you're going to want to type in the server from your existing broker. For this example, we're just going to use 8cap. You click on that server, and then it will give you your login and password. Remember, the server and login and password is going to be displayed on your dashboard or in your email when the broker sends you your credentials. So now you just want to type in your login and password, and then just click the top right-hand side where it says sign in, and you're all set. If you can't find these credentials, don't worry. There's a way to get them back, and we're going to go through that in the next step. So it's retrieving your missing MT4 login details. If they haven't arrived, the first port of call is reaching out to the broker's live chat, which most brokers provide on the bottom right-hand side of your platform. If that's not available, find the broker's customer service or the contact us section on their website. Just a heads up though, responses can sometimes be a little bit slow, especially on the weekends, so make sure to just be patient with their response. Let's run through an example with PU Prime to show you how it's done. Now, I'm going to show you the steps that you could take if you don't get your login credentials sent to your email or you don't have them present on your dashboard. Let's use PU Prime for example. You could go to the bottom right-hand side where it says, "Hi, need any help?" Most brokers have live support 24/7. So you can just click on that customer support, and somebody will be able to help you. You could chat with this 24/7 customer support and they'll be able to help you finding your login credentials. If you don't find a live chat option with your broker, you could just find the contact us section and somehow be able to contact them through telephone or through email. It's very important for me to break down the two different types of setups that we provide to our community in the Telegram channel. The first type of setup is just a general thought or analysis about a certain market. So if we take a look at the top message in this Telegram channel that says Euro AUD and then buy setup, I've provided two different screenshots with different timeframes just to give you a well-rounded approach to the analysis. And then I give you a couple sentences or a paragraph of my general analysis or thoughts about a certain market. And this is for more experienced traders to be able to build intuition and context about a certain market before actually placing a trade in the market. Now, it's very important to know that this is not for you to place a trade in that exact moment. This is for you to build your own context about a certain market so that when it becomes time to place that trade, then you're actually placing it into your MetaTrader 4. So we can see the message reads, "Keeping my eyes peeled for buys on Euro AUD, steadily creating higher highs and higher lows, and it looks like we may continue towards the upside, just waiting for a retracement back for a better entry." So this means that you have to use your own intuition and expertise to actually find an entry down the road. But then if we look at the message right below it, we can see that this is considered a trade signal, and you want to place this trade right when you see it. We can see it says currency pair GBP Canadian dollar buy order. So right when you see that, that means you want to place that trade right away. It shows the entry, the take profit, and stop loss. So this is where you're just going to copy trade and make money off of the exact trades that I place in the markets. Now, as you could tell, the messages that include a couple screenshots and a brief explanation about that market, these are for more experienced traders. The reason being is because I'm not telling you when to place the trade. I'm just giving you a brief overview and analysis of what I think is going to happen, and then you're going to use your own expertise to actually place the trade on your own terms. But with the message right below it, I'm telling you exactly when to place that trade and also including my entry, take profit, and stop loss so you could perfectly copy it into your MT4 terminal. Considering we prioritize responsible trading here at GSM Charts, it's very important that if you're a new trader in our community, that you're only focusing on our trade signals and then you're going into our trade setups. This will allow you to build the expertise and knowledge that you need to then move to the next step and start understanding the explanations that we provide within our setups with the screenshots. So make sure to just start off focusing on the trade signals and copy trading. And then after 30 days, reach out to our customer support. We will review your account just to make sure that you're doing a good job copy trading into your MT4 terminal. And then we will tell you to start looking at our buy and sell setups. But remember, both of these setups are still going to be provided within this one channel. So you want to make sure you know what you're focusing on before actually placing trades. Now, let's get into the fun part, which is copying live trading setups in our Telegram channel. Since our trading ideas are one of the most valuable portions of our community, we want to make sure that you're copying them correctly into your MT4 platform. So let's take a look at an example of how you're going to effectively copy these trades from Telegram into your MT4. The first thing you're going to want to do is refer back to our Telegram channel. And I'm just going to scroll up to one of the trading signals that we provided. We can see here January 4th, we have AUD JPY, a sell order. So what we would want to do is go to our MetaTrader 4 app and look for the AUD JPY section on our quotes page. And if we don't have it present, like we don't right now on our quotes page, we'll just go to the top right hand side and press add and then click in AUD JPY and then just click the green plus button. And now if we go back, it should be present right on our quotes page, and it should stay on our quotes page now. So now we'll click on AUD JPY and we'll click trade. So now we could see it asks a bunch of questions like what's our stop loss and what's our take profit. So we'll go back into the trading signals and we'll see what our entry is, our take profit, and our stop loss. Now, it's very important to note, and we'll go over this in the next video, that the entry price is close to where current market price is. And current market price is listed above the sell and buy price, right? So make sure that the current market price where it says entry, 96.986, is close to those numbers where it says above sell and above buy. So if that is the case where it's very close to the entry, then it is a valid trading setup that you could actually enter on your platform. Then the only thing you're going to want to copy is just the take profit. So 97.184, you would put that right here. And then you would put the stop loss exactly where it says, 96.889. Perfect. Now, if you want to figure out your lot size, which is in the middle right here, it's going to take an extra step. I highly recommend using a position size calculator to effectively calculate your lot size so that you're managing risk properly. The position size calculator that I recommend is called MyFXBook. So you're just going to want to go to your internet browser and type in myfxbook.com. And this is a completely free position size calculator. You're just going to click the top 3 bars on the top right hand side and click calculators. From here, all you're going to want to do is go to position size calculator. Just skip that ad. Go to position size calculator. And this is where you want to actually calculate your lot size. So considering we are trading AUD JPY, we're just going to scroll all the way up to AUD JPY. You're going to type in your account currency. We're just going to use US dollar for the example. Let's say our account size is $1,000 and we only want to risk 1% because you should only be risking 1 to 2% of your account balance per trade. And then remember, our stop loss in pips was 10 pips, and it will always say the pips in the trade signal. So make sure to refer back to the trading signal. It's 10 pips. So we'll use 10 pips. And then you press calculate. And here you'll see that you should be using a 0.14 lot size. Only refer to this bottom number where it says sizing, 0.14 lots. So what you're going to do is you're going to go back to your MetaTrader 4 and you're going to type in 0.14. And then you would sell, considering the trading signal said to sell AUD JPY. And that's how you effectively copy the trades from Telegram into MetaTrader 4. Now you may be asking yourself, what if I'm late or missed a trading setup? Don't sweat it. Let's get into it. If the trade is still within a viable time frame, then it does make sense to enter that trade still, just making sure you're adjusting your stop loss and your take profit. It's also very important to know when to pass on a trade. If you're very late to a trading setup and it's past its prime time, then it's probably better to hold off and just wait for the next trading idea. Let's take a look at an example. There may be times where you are late to a trading setup. And in this video, I'm just going to give you a quick tutorial of what you should do if that does happen. I'm just going to scroll up to a signal that we provided. Here we go. AUD JPY sell order. So of course, we're going to make sure to go back into our MetaTrader 4 platform and we're going to go to AUD JPY and press trade. Now you want to refer back to the Telegram channel and see what time I sent it. You could see I sent it at 8:41 a.m. Let's say that you saw this around 9 a.m., right? Like 15, 20 minutes after the fact. The first thing you want to look at is the entry price that I entered on. We can see it's 96.118. If we go back to MetaTrader 4, we could see that now price is at 97.180. So that means we're 100 pips past what we were when I actually entered the trade. So you probably would not want to enter the trade if it's that far past my current entry price. So considering that we're so far away from what the entry was in the trading signals, we're just going to pass on this trading idea. But let's say that we were 5, 10 pips away from that entry price. Then it would make sense for us to still enter that trade. But it's very important to make sure that you're adjusting your take profit and stop loss accordingly. So going back to the Telegram channel, you can see that the entry is at 96.118. Let's say we entered at 96.200, like 8 or 9 pips away from the original entry. So what you're going to want to do is recalculate the stop loss and take profit accordingly. So considering our stop loss was 13 pips away from our original entry, now you're going to want to make sure that it's 13 pips away from your current entry that you entered on. So if it was 96.200, it would be a little bit different than what this stop loss currently is. And the same thing also goes for the take profit. You'll want to make sure to add 13 pips on top of that take profit, considering we added a little bit higher in the market. Remember, there's going to be a lot of times where you miss that trading setup, and it's better to just pass on it and wait for that next trading opportunity. And there you have it, our guide in a nutshell. And remember, GSM Charts isn't just about providing trading setups. It's about fostering a self-reliant trading community. We're here to back you up every step of the way on this thrilling trading journey. So happy trading, and I'll see you guys in the community.